Hello, and welcome back to Derivatives and Risk Education. In our first video in the Trader Insight series, we looked at the best degrees to help you land a career in trading. The next crucial step is understanding the diverse landscape of trading roles themselves. Today, in the second video in the series, we're going to explore the different types of trading jobs available in the financial markets, and most importantly, help you begin to figure out which one might truly be the best personal fit for your skills, personality, and long term aspirations. Breaking into trading successfully isn't just about checking the right boxes on a resume or having a specific degree. It's about aligning your strengths and interests with the demands and environment of the role. Broadly speaking, the financial world where trading takes place is divided into two main ecosystems: the sell side and the buy side. The sell side is primarily comprised of large financial institutions like investment banks, broker-dealers, and market makers. Their essential function is to serve as intermediaries in the financial markets. They provide crucial liquidity by being ready to buy or sell assets. They execute trades on behalf of their diverse client base, which includes large institutional investors, corporations, and governments. And they are heavily involved in the creation, structuring, and distribution of new financial products. Think of the sell side as the crucial infrastructure and service providers that make the financial markets function smoothly. Their trading desks are often fast paced, dealing with high volumes of transactions throughout the trading day. The buy side, on the other hand, encompasses institutions whose main goal is to manage pools of capital and generate returns. This includes entities like hedge funds, asset management firms, pension funds, endowments, and sovereign wealth funds. Their core mission is to invest this capital strategically to achieve specific financial objectives for their clients or beneficiaries. Trading on the buy side is focused on the execution of proprietary investment strategies, managing overall portfolio risk, and generating alpha, which is returns that outperform a given benchmark. The pace and style here can vary greatly depending on the specific firm and its investment strategy. Understanding the distinct cultures and daily realities of the sell side versus the buy side is key when considering your path. In upcoming videos, we'll take a much deeper dive into what it's truly like working day to day in these different environments. Now that we understand the fundamental difference between the sell side and buy side environments, let's delve into the specific types of trading roles you'll typically find within each, and the kind of person who tends to thrive there. On the sell side, roles are focused on facilitating market activity, providing liquidity, managing the resulting risk from these transactions, and serving the needs of institutional clients. Common roles include market makers, who are constantly posting buy and sell prices for specific securities or instruments, absorbing and offloading risk to keep the market moving. You also have sales traders, who are the vital link between the trading desk and the institutional clients, understanding client needs and ensuring that large orders are executed efficiently with minimal market impact. Additionally, there are specialists in areas like structured products, who use their technical expertise to design, price, and trade complex, often bespoke financial instruments, often combining derivatives or different asset classes to meet a client's specific risk or return needs. If you are a highly energetic individual, thrive in a continuously moving, high volume environment, enjoy the challenge of managing complex risk exposures under pressure, are comfortable with constant communication and interaction, and want to be directly involved in providing essential liquidity to the financial markets, then a sell side trading role could be an excellent fit for your skills and temperament. Moving over to the buy side, the environment and focus shift significantly. Here, the primary objective is generating profits and managing risk for the fund or portfolio itself, implementing specific investment or trading strategies. Typical roles you'll encounter include portfolio traders, who are responsible for executing the trades dictated by the portfolio managers to implement investment strategies across various asset classes. They are often quantitative traders, particularly as systematic hedge funds, who are deeply involved in developing, testing, and running automated trading models based on complex statistical analysis. You might also find traders who combine execution responsibilities with significant fundamental or quantitative research, acting almost as analyst traders. If you're a more analytical and strategic thinker, primarily focused on generating proprietary returns and managing risk within a specific portfolio context, enjoy developing or executing intricate investment ideas, are comfortable with the pressure of performance targets, and perhaps prefer a role where the focus is more on research, strategy, and execution rather than constant external client interaction, then a buy-side trading role at a hedge fund or asset manager might align better with your preferences. Now, regardless of whether you're on the sell side or buy side, traders inevitably specialize in different asset classes or types of financial instruments. There are broad groupings like equities, which means trading company stocks and related derivatives. This area often requires a keen interest in specific businesses, industry trends, and understanding company-specific news and financials. Then there's fixed income, a vast market covering bonds and interest rates. This is often broken down into rates trading, focused on government bonds and interest rate derivatives like swaps and futures, which is heavily influenced by central bank policy, inflation data, and macroeconomic forecasts. And credit trading, dealing with corporate bonds and instruments like credit default swaps, which requires deep analysis of the creditworthiness of companies and evaluating their probability of default. FX, or foreign exchange, and commodities, ranging from energy like oil and gas to metals like gold and copper and agricultural products, frequently grouped together because their prices are heavily driven by major macroeconomic forces, geopolitical events, supply and demand dynamics, and even weather patterns. Trading these often requires a strong understanding of global flows and real-time information processing. Finally, and an area close to my own background, are derivatives and structured products, which can span across all these underlying assets. Trading these often requires a strong quantitative understanding of pricing, volatility, and complex risk structures. You might be drawn to trading equities if you love diving deep into specific companies and understanding micro-level drivers. Trading rates could be for you if you're fascinated by the big picture of central banking and global economic policy. Credit might appeal if you enjoy meticulous financial analysis and assessing risk at a company or sovereign level. FX or commodities could be your area if you thrive on following global news flow and understanding tangible supply and demand. And derivatives or structured products are often the domain of those with exceptional quantitative and analytical skills, who enjoy dissecting and managing complex financial structures and their associated risks. In upcoming videos, we'll explore these specific asset classes in much greater depth. So, with this expanded view of the landscape, the environments, the roles, and the asset classes, how do you begin to figure out where you might best fit? Think critically about your own personality and how you handle pressure. Are you someone who can make rapid decisions with incomplete information? Or do you prefer time for detailed research? What's your natural inclination towards risk? Are you comfortable taking directional bets? Or do you prefer managing defined risk exposures? How strong are your quantitative and analytical skills? And do you enjoy applying them to complex problems? Consider your communication style. Are you energized by constant interaction, or do you prefer focused individual work? Reflect on your genuine interests. What kind of news do you naturally gravitate towards? Company news, economic reports, political developments, or perhaps understanding mathematical models? Also, think about the pace of trading that suits you. High frequency trading involves milliseconds. Day trading is within a single session, swing trading over days or weeks, and position trading over months or longer. Each requires a different temperament and analytical focus. Think about whether you lean towards quantitative, model-driven trading or a more discretionary approach based on intuition and market feel refined by experience. The absolute best way to truly understand which path might be right for you is through direct experience. Internships are invaluable. They give you a first-hand look at the day-to-day reality of different desks and environments. Try to get exposure to a few different areas and ideally, if possible, experience working on both the sell side and the buy side to see which culture and focus resonates more with you. Network with people working in these roles. Informational interviews can provide candid insights. Read widely about different markets and trading strategies, and practice with trading simulators or even trading a small amount of your own capital to see how you react emotionally to winning and losing trades. Finding the ideal trading role is a significant personal and professional exploration, but by systematically understanding the fundamental differences between the sell side and buy side, exploring the characteristics of the various asset classes, and honestly assessing your own skills, personality, and interests, you can make much more informed decisions about where you might best fit and how to effectively target your career aspirations. It's about finding the intersection of what you're good at, what you enjoy, and where those talents are most valued. I hope this overview has been helpful in navigating the exciting, challenging, and potentially very rewarding world of trading careers. This video provides the framework. In our upcoming videos, we'll be drilling down into the specifics of sell-side and buy-side roles, individual asset classes, and crucial related areas like risk management. Find this video insightful and valuable, please do give it a like, it really helps the channel. And make sure you're subscribed to Derivatives and Risk Education so you don't miss those upcoming deep dive videos. Thanks for watching.